Friends, this statistic may come as a surprise to many. So far this year, primary fund outflows have approached 4 trillion. From the highs of October 8th, outflows have exceeded 1.3 trillion, and we're not even halfway through the month, and 400 billion of the primary fund has already flowed out. Yet, the market is still moving higher in shock. Can anyone who knows anything about this explain what's going on here? Hong Kong Media 01 reported that data released by China's State Administration of Foreign Exchange on August 8th showed that China's direct investment liabilities in its balance of payments fell by US 8.1 billion in the third quarter. This measure of foreign direct investment fell by nearly US 13 billion in the first 9 months of the year. It's believed that although the Chinese government has introduced stimulus measures to stabilize the economy, some foreign investors are still pessimistic about the future. Foreign investment in China has declined over the past 3 years, mainly due to geopolitical tensions, pessimism about the Chinese economy, and unfair competition in industries such as automobiles. If the downward trend continues for the rest of this year, it would be the first annual net foreign direct investment outflow since comparable data became available in 1990. It's reported that foreign companies that have reduced some of their business in China this year include automakers Nissan, Volkswagen, and Konica Minolta. In addition, Nippon Steel said in July that it would exit from a joint venture in China. Nippon Steel will exit from its joint venture with Baoshan Iron and Steel and comprehensively adjust its half-century-long cooperative relationship with Baoshan Iron and Steel. Its steel production capacity in China will be reduced by 70%. In 1997, Nippon Steel participated in technical assistance. It assisted in the construction of China's first modern steel plant, Shanghai Baoshan Iron and Steel Plant, which became a key project of Sino-Japanese economic cooperation at that time. Since then, Nippon Steel has also provided support for the construction of several blast furnaces. With the rapid development of China's automobile market, Bao Steel and Nippon Steel established a joint venture, Bao Steel Nippon Steel Automobile Plate Company Limited, in 2024. Each side contributed 50% of the capital. The joint venture contract was for 20 years and will expire in the summer of this year. Nippon Steel decided to terminate the joint venture contract and sell all of its shares to Bao Steel. On the other hand, in 2021, Nippon Steel filed a lawsuit against Baoshan Iron and Steel, believing that Baoshan Iron and Steel had infringed the patent rights of electromagnetic steel sheets used in hybrid vehicle motors. The lawsuit is still ongoing. IBM, the world's leading technology and consulting company, is shutting down its R&D division in China, which will affect about 1,000 employees. IBM recently closed 2 of its R&D centers in China and laid off more than 1,000 employees. Many Chinese netizens see this as another foreign company running away after being defeated. There is some truth in this statement, but it's not entirely accurate. Here is some additional information for your reference. First of all, IBM has not completely withdrawn from China. The total number of employees in China is still more than 10,000. The direct cause of this layoff is poor business performance. Influenced by China's domestic policy, state-owned enterprises and government departments must choose domestic products for their IT purchases, which has a greater impact on IBM's business. In the past, IBM's services were mainly oriented to large state-owned and central enterprises, while it had less business in private enterprises, especially small ones. Nevertheless, some large private enterprises such as Huawei had paid a huge amount of money to IBM to provide consulting services. For example, Huawei had spent $553 million for IBM to sort out its business processes. Overall, China has been an important market for IBM. In addition, China is not only an important market for IBM, but also its R&D talent gathering place. But today, this position is gradually replaced by India. IBM is investing more in India as it closes its R&D center in China and now employs more than 130,000 people in India, even more than in the US. The closure of the Chinese R&D center also reflects the wider context of changing US-China relations and US technology restrictions on China, which have forced companies such as IBM to adjust their strategies. By contrast, China's outbound investment continues to grow significantly. According to preliminary data from China's State Administration of Foreign Exchange, Chinese companies increased their overseas assets by about 34 billion in the third quarter. So far this year, outflows have totaled 143 billion, the third highest on record for the same period. Although the stimulus measures announced by Beijing authorities in late September have had some effect, the Hong Kong stock market has continued to weaken, with the Hang Seng Index falling below 20,000 points on Tuesday this week. This makes the economic outlook for China and Hong Kong even more gloomy, and the outside world suspects that the current bailout measures are far less effective than expected. In addition, the offshore yuan has fallen more than 1,000 basis points against the dollar. The yuan has fallen sharply in the last 2 days. Hong Kong stocks have broken down, and then the Xinhua A50, including the Nasdaq China Financials Index, has plunged, which is a big pressure on the whole market. Although Trump just won the election and is not yet in the White House, funds of all stripes have already been affected by the expectation of an intensified trade war between the US and China and have begun a mass outflow. The exchange rate has been more volatile over the past 2 days because capital markets expect the Beijing authorities to inject a lot of liquidity, and stocks will go up as a result. But at the same time, the paper currency will depreciate, so the exchange rate will follow. This is the most basic common sense in economics. Over the past 2 days, many people have asked how much this exchange rate can break through and whether they should exchange some US dollars. To be honest, there is no need to panic. Because if you let it go, the exchange rate may indeed fall sharply, even to the extreme situation of 1 to 10, 1 to 20 are possible. But the Chinese government cannot just ignore it. The government has to maintain its reputation internationally, so when it receives a certain level, it will directly impose foreign exchange controls. What is foreign exchange control? It means that there is no such thing as an exchange rate. After the state controls, the open market will always be 1 to 7. If you want to exchange currency at the market price, you can only do it on the black market. Now, not only is the capital fleeing, but people are fleeing as well. According to a survey conducted by the Asia Pacific Research Institute, or CUHK, in Hong Kong, 34.1% of the respondents indicated their intention to emigrate, with most of them saying that Hong Kong's poor economic situation or lack of prospects was the main reason for immigration. Compared with the past 3 years, economic prospects have become the primary consideration for immigration for the first time. According to the survey, among those who intend to immigrate, 14.7% chose to immigrate because of Hong Kong's poor economic prospects, followed by an undemocratic political system and frequent or unstable political disputes. Compared to the past 3 years, the main reason for 2023 is deterioration of human rights. 2022 is political instability, while 2021 is regression of democracy or lack of democratic election. In mainland China, the flow of migrants is also increasing. A wave of emigration has also recently begun in Beijing, with high-net-worth individuals preparing to leave the city. According to data, 12,800 people went to Europe. They feel that Europe is more suitable for them than the US and the slow-paced Canada. This has led some European countries becoming their first choice of immigration. For example, Spain allows the whole family to settle together as long as they can provide proof of a deposit of 180,000, with no age or language restrictions. And the processing speed is very fast. Usually 2 or 3 months can be done. The whole family can immigrate together, making it very cost-effective.
Sold
the house in Beijing, 45 years old. Many people don't understand why I didn't go to Europe or the US but came to Malaysia instead. Malaysia really can't compare with the prosperity of Beijing. There is no convenient online shopping and takeaway like in China, nor are there as many high-end restaurants and fashion events as in Beijing. But I still decided to settle here, because as long as you live here for a while, you will really fall in love with Malaysia. In contrast, people in today's Chinese society are having a very hard time. Especially for young people, the hope of improving their quality of life through their own efforts is getting slimmer and slimmer, and choosing to do nothing seems to be the best way to fight against reality.